Welcome guys, welcome to my channel. Ma. Yeah guys, today's topic is adjustments. Yesterday we have discussed about the formats of trading, profit and loss and balance sheet. Now today I want to discuss about the adjustments, the most important adjustments which can be asked for your final examination point of view. Like for Telangana Board of Education, Intermediate Board of Education, they keep on asking the same type of adjustments. They are not going away from these adjustments. So I have picked up 11 adjustments which are most important. So let me explain you one by one, and after that we will go through one problem. We can solve one problem, right? Karthik? Yeah, first guys, everything is clear, right? Is it clear to everyone? Yes. So first and foremost, the most important adjustment is closing stock. The most important adjustment is closing stock. Closing stock is the stock at the end of the accounting period. Whatever the leftover stock is there at the end of the accounting period will be called as closing stock. And this closing stock will be having two effects. Every adjustment is having two effects, ma. So please be careful while posting them in the final accounts. Whether in trading, profit and loss or balance sheet, we should be very careful with the posting of these transactions. So closing stock comes under trading account, credit side. It will be nice if you people maintain notes for these adjustments. Better you can go through very quickly. For your examination point of view, you can go through very quickly for each and every adjustment. So trading account, credit side, and balance sheet, asset side. Closing stock written on trading account, in trading account, credit side, and balance sheet, asset side. Next important adjustment is outstanding expenses. Guys, this closing stock is compulsory adjustment. In every problem you will find this closing stock. So obviously 1 mark is counted for your final exam. Now let us go through the second adjustment, that is outstanding expenses. Outstanding expenses. What do you mean by outstanding? The meaning of outstanding is still pending, or we are liable. Okay, still pending or liable to pay certain expenditure. Example, outstanding wages or outstanding salaries or outstanding of any insurance amount or any expenditure. So if any expenditure is outstanding, that expenditure, whatever the expenses is, it should be, this adjustment amount should be added to the respective expenditure. Suppose outstanding wages is given, so we need to add outstanding wages to wages in the account. And next, as I told you, we are still liable to pay certain amount. This comes under balance sheet liability side, because we still liable to pay. We owe some amount to the labor. We owe some amount to the labor in case of wages, outstanding wages. In case of outstanding salaries, we owe some amount to the office staff, and in case of insurance outstanding, we are liable to the insurance company. So that is what here balance sheet liability side we are going to write that outstanding expenses. Then coming to outstanding incomes, or it can be called as accrued incomes. Accrued or outstanding incomes are one and the same. The amount which we need to receive, still it is not yet received. The income which is not yet received and which have to be received is called as an outstanding income, or it can be called as accrued incomes, still pending income. So we need to receive that income. We need to receive that income. So again, whatever the transaction is, if it is like outstanding expense or outstanding income, simply add to that respective income. In case of outstanding expenses, add to respective expenditure. In case of outstanding income, add to respective incomes. Example, commission receivable or interest receivable or accrued interest means interest receivable. Still we need to receive the interest. So what we need to do, add to the respective income and then write the transaction in the balance sheet asset side. Write the adjustment entry again in the balance sheet asset side, because still it is it has to be received by the organization. So in future we are going to receive in any way. That is the reason why we are calling it as an asset. Then prepaid expenses. Fourth one is prepaid expenses, or it can also be called as unexpired expenditure. Prepaid expenses or expired expenses. Don't be confused with these two transactions, because students are getting confused whenever it is given as unexpired expenses. Unexpired insurance, example of unexpired expense, unexpired insurance. So don't be confused, it is very easy. Unexpired expenses are the expenses which are already paid in advance. We have paid some in advance. So whenever you pay any expenses in advance, what we need to do, we need to deduct this prepaid expenditure amount from the respective expenditure. Let us take the example of insurance. Prepaid insurance. Actually, insurance, where we will write, insurance will be written on the profit and loss debit side. So on profit and loss debit side, this prepaid insurance amount will be deducted from the insurance amount, and then again this adjustment amount will be written in the balance sheet asset side. Why it became asset? Because we have already paid in advance and there is no need of paying the same amount in the future. So that is the reason why it is called as an asset. So prepaid expenses less from the respective expenditure as well as balance sheet asset side, we need to post the entry. Now next adjustment, income received in advance. Income received in advance. As we are paying any expenditure in advance, in the same way we may receive some incomes in the advance. So for example, received interest in advance. Received interest in advance. So whenever we receive any income in advance, that amount must be, that received advance amount which we have received must be deducted from the respective incomes. Suppose commission received, and commission received in advance. So commission received in advance is related to future, but we are dealing with the present accounting period, and the expenses and incomes which are related to current year must be added, and the expenses and incomes which are related to past or future must be deducted, as we require to get the current accounting status. So incomes received in advance means next year amount we have received in the current year. So what we need to do, we need to deduct from the respective incomes. So and then from in the balance sheet liability side we need to write. Why we are writing in the liabilities? Because whatever the income we have received in advance is going to be a burden for us till we complete that particular work. So it is treated as a liability. Very important adjustment. And guys, you can observe one thing, whenever it is given as outstanding, we are adding the this outstanding amount. Whenever it is given as prepaid or received in advance, when we pay in advance or receive in advance, it must be deducted. Still outstanding, not yet received or not yet paid means add. Already paid in advance or already received in advance, just deduct. Simple adjustment. Okay, it is very easy to remember also. Next one, bad debts. Bad debts is a loss. Why we get bad debts? Simple. As you all know, debtors is nothing but the customers from whom we need to receive amount. The customers from whom we need to receive amount, they are called as debtors. From the debtors, sometimes any one customer may fail to pay the amount on time. Any one customer, due to his insolvency position or due to any other case, whatever the case may be, if he fails to pay the amount on time, then that will be that particular amount, that particular customer will amount will be due amount will be called as a bad debt. It becomes a which is irrecoverable. Now, it is a loss, so always losses must be recorded in the profit and loss account debit side. It is very easy to remember. And then the second effect in the balance sheet asset side, because bad debts related to debtors. So we need to deduct from the total debtors. Actually, debtors means the amount which we need to receive. From that amount, we came to know that these are the bad debts. Some loss has been occurred. So what we need to do? We need to just deduct these bad debts from the debtors. That is balance sheet effect. And then reserve for bad and doubtful debts. It is expected loss. We are keeping a reserve for future expected loss, future unexpected loss. Some more bad debts can occur in future. So that is the reason why, yeah, Karthik, it is not visible. Okay, we'll try. Is it okay now? Is it okay, Karthik? Is it visible now? Everyone, is there any problem with the uh, screen? Is it okay now? Fine. Thank you. So here, reserve for bad and doubtful debts. In future also we may get a loss like this, like some bad debts can take place. So that is the reason why what we are doing, we are keeping a reserve for future unexpected loss. That is, it is also future unexpected loss. That is the reason why we need to treat this entry in the same way as we did for bad debts. Just we need to keep a reserve and we need to write on the debit side of profit and loss account, and then the same amount will be written in the balance sheet. It should be deducted from the debtors. Same transaction, same entry. Both are having same entries. But students will get one doubt. What is that? Bad debts direct amount will be given, but reserve for bad and doubtful debts, sometimes he may give amount, but sometimes he will say percentage of amount. When it is given as percentage of amount, guys, remember, very very important, after deducting bad debts from the debtors, after deducting bad debts from the debtors, the leftover amount, the leftover net debtors amount will be considered for calculating this reserve for bad and doubtful debts. So on the amount which arrived after deducting, clear ledu, the amount which is deducted, sorry, the amount which is arrived after deducting bad debts from the debtors will be considered for the calculation of reserve for bad and doubtful debts. Please remember, don't calculate on the debtors which are given in the trial balance, but calculate the reserve for bad and doubtful debts on the amount which is arrived after deducting bad debts from the debtors. That's it. Oh, it is not clear. Excuse me, guys. Amma, నెట్ ఆఫ్ చేసి ఆన్ చేయి, నెట్ ఆఫ్ చేసి ఆన్ చేయి. నెట్ ఆఫ్ చేసి ఆన్ చేయి. అర్రే టీవీ బంద్ చేయమను. షట్ చెప్పాను కదమ్మా, కట్టేయట్లేదు నట్టు బజ్జేకు. మంచి. Yeah guys, is it clear? Is it clear now? Please let me know so that I can continue. Oh, okay, fine, Kaushik. Right, now depreciation. Depreciation is one of the most important adjustment again. Adjustment again. Depreciation in the name itself, it is suggesting that there is a decrease in the value of a fixed asset. Whenever there is a decrease in the value of an asset, that will be called as depreciation. Is it not clear? Just let me check the network. Explorer. Excuse me. మా ఆఫ్ చేసి ఆన్ చేయి. నేను టీవీ పెట్టొద్దని చెప్పి మొత్తం సంకనాకి ఇచ్చారు. బంద్ చేసి. Is it okay everyone? Karthik, Kaushik. Anyone answer me? If it is okay, we can continue. Now it is okay. Fine, depreciation. So decrease in the value of an asset. Whenever any asset value is decreased, it is a loss. So losses always will be recorded in the profit and loss account at debit side. Always, all the losses are in the profit and loss account debit side. And at the same time, in the balance sheet, as we have already known that depreciation, decrease in the value of asset, we need to deduct the amount of depreciation from the respective assets. Suppose if it is given as, again it is blur. Shit. Okay, let me know whenever it is clear. Not able to see. Oh. Okay. Next, depreciation, balance sheet, asset side, less from respective asset. Suppose it is given as depreciation on machinery. Depreciation on machinery. If depreciation on machinery is given, write the depreciation amount in the profit and loss account debit side, and then in the balance sheet, deduct the depreciation amount which is calculated from the machinery, that is respective asset. Simple thing. If depreciation on furniture is given, deduct depreciation amount from the furniture. If depreciation on any other asset is given, deduct from the respective assets. That is it. Next one is interest on capital. Most important, interest on capital. Actually, I have to write capital, but I have written it as loan, so I have just strike it off. Interest on capital. Guys, already I have told you, capital as a liability, it is owner's equity, owner's investment in the business. So business has to repay not only capital but also some return on the capital apart from net profit. That return is called as interest on capital. Interest on capital. So interest on capital for the organization, it is a loss. If you think from business point of view, as we are doing accounts, we need to think from view, not from owner's point of view. So interest on capital is a loss for the organization. That loss will be recorded in the profit and loss account debit side. All the losses, profit and loss debit side, irrespective of whether the whatever the expenditure, just write the loss on the profit and loss account debit side. And then balance sheet, what will be the effect in the balance sheet? Interest on capital will be added to capital in the liability side. Capital will be recorded in the liability side, and this interest on capital will be added to capital because we are increasing the liability capital. Along with that, we need to pay interest also, so that interest amount will be added to capital. Guys, now it is okay, I think. Just reply me if it is okay. Next, interest on loan. This is similar to the interest on capital adjustment. Simply on the loan amount which we have, which we took, we need to pay some interest, so that interest becomes a loss for us. So profit and loss debit side, all losses will be debited in the profit and loss account. And at the same time, balance sheet, and in the balance sheet, we need to add this interest on loan amount to the loan amount. Interest on loan will be added to the interest, the loan amount which we have taken. That's it. And coming to interest on drawings. Interest on, okay, right. Interest on drawings. What do you mean by drawings? Drawings is nothing but the amount which is withdrawn from the business by the proprietor for his personal use. So on for his personal use, whenever he withdraws some amount from the business, he need to pay interest on these drawings. So when he is paying interest on his drawings, as owner is different from business, we need to think from business point of view. It is a income for us. It is income for us. So interest on drawings is an income. It will be recorded in the profit and loss account credit side. Interest on drawings is an income which will be recorded in the profit and loss account credit side. And at the same time, for capital, what we need to do, just in the balance sheet capital, in the balance sheet liability side, just deduct the interest on drawings amount from the capital. In the balance sheet liability side, deduct drawing interest on drawings amount from the capital. So these are the adjustment entries which you people need to understand. You need to remember all these adjustments, so that you can score 20 out of 20 in your final exams, final accounts, sorry. Just go through one by one, take 2 minutes of time, then we will start solving a problem. Now guys, if it is clear, let me know, because we are going to start problem, so that we should not get any disturbance. It should be very clear. If it is okay, then I will continue with the problem now itself. Otherwise, I will stop my live. Again, I will start streaming. If it is okay, then just let me know. Just go through the adjustments. Okay guys, better we will stop live now, and again we will start within 5 minutes. Is it okay? Fully blurred. Okay, fine. Interest on bad debts? No. It is provision for bad debts or reserve for bad debts. No, it is not interest on bad debts. Shall I start again or else? If it is clear, then I will start. Otherwise, I will stop my live and I will again come back with within 5 minutes.